Hello and welcome to this week's episode for SPY Trader Now. I am your host. My name is Ken, and our model portfolio is up 12.91% year to date. Our goal here at SPY Trader Now is to beat the returns of the S&P 500 buy and hold investor, and we are currently doing that. Their portfolio is up 12.14% year to date. So good for us for doing that so far, and we want to continue to beat them through the remainder of this year. In addition to that, the stock market strength color signal is green. Last week, the S&P 500 gained 0.02%. So it was basically a very flat week. You see this in the thumbnail here. You see the previous week's candlestick in red, where it closed at the bottom of that body of the candle. Then you look at the current week where you have a nice green candle, but it was just flat compared to where we opened and where we closed the week and of last week and where we closed the week of this week. It was just basically flat. It's just been a flat week. But during that time, we had what looks like a washout, where we can see that long body coming down and then finding support down here. Now, on this chart here, this one here is the 40-week moving average. We're getting close to it, but we found support just above that. We do have a negative divergence on this chart, where you can see on the MACD, you've made a lower high, and on the price action, you've made a higher high. And as a result of that negative divergence, the market did correct down. Now, this correction that's down kind of resembles this one here with a little bit more aggressiveness towards it. Over here, it's kind of looking like this one here a little bit. So we don't have the up leg happening just yet. Last week, we did not make any trades. Okay, here are all my trades for 2024. If you want to see all the trades I've made for the past 3 years, you can head over to this link. It will be down in the description down below. If you want to stay tuned every week to see how I trade this portfolio, go ahead and hit that like button, subscribe to my channel, and ring that bell. We currently have 3 open positions highlighted in yellow in our model portfolio. We have 200 shares of SPY, and we've been in that for 194 days. Over here is the price, the buy date that we purchased that on 129.24. We are profitable by 9.28% in that position right now. In addition to that, we also have 2 long calls. And you can see that we're currently upside down in those long calls right now. So let's just hold tight. If this market does correct up, these will start to be profitable for us, as well as we'll make some cake here on our 200 positions. And then we're going to change the portfolio and go short. I'll show you that in this presentation. Now, here is our model portfolio in blue, and we want to see graphically how we compare against the benchmark, which is the S&P 500 buy and hold investor in pink. And for a long time, we were trailing them because they just shot right out of the gate there early in the year. But as of recently, we did surpass that portfolio, and we do want to continue to beat that by the end of the calendar year. Ideally, we want to beat it by, let's just say, 5 percentage points would be our goal. So last week, the S&P 500, this is looking at a daily candlestick chart going back 6 months. We were kind of in this downward trading channel, except for a couple of outliers that are these 2 days right here. And so I put in these channel lines here just to kind of get a representation. And we have just started to break out above that. Now, we did that before, and we had a fake out and came down. Are we going to have another fake out and come down, or are we going to go up and hit the 61.8 Fibonacci? Now, this Fibonacci I grabbed from this high to this low, and now we are measuring what the rebound off of this low right here at about 510 is going to do. here are our cycle brackets. You see that that low came very close to this cycle low. So, and by the way, this cycle here, which you're going to take from here to here, is a cycle breakdown. So we clearly have a cycle breakdown telling us that we do not expect this cycle, the current cycle, to take out the old high. We expect to sell somewhere between the 50 and the 78.6 fib, which is somewhere around here, like this high right there. And I'll show you that in later on in the presentation. So our expectation is to stay on our longs until we meet a 78.6 fib. Then at that point in time, we're going to sell our calls. We're going to take on in the money covered calls. And then we may also take on some puts. But right now, you're seeing that you have a rising phase. You have the MACD coming down here at a low level. And you have the histogram showing strength going up. You have the slow stochastics above its signal line, above 20 and rising. No reason to fight that. We want to be long the market right now, not short at this juncture. Now we are looking at a ratio chart, NASDAQ 100 to the S&P 500. That is the red and black line. That is the ratio chart. The blue line is the S&P 500 represented by the SPDR's SPY index. Now, we fell off of a cliff on the ratio chart, and we just started to break out from this resistance line, which is evidence that you're going to start filling up this white space going this way. When the ratio chart, meaning that the NASDAQ 100 surpasses the S&P 500, that is bullish for the S&P 500 as well as the NASDAQ 100. Also, look at the MACD coming down here, getting ready to cross above its signal line. Slow stochastics already above its signal line, although it is losing some steam. I do expect this to go up, which will take the S&P 500 up with it to a certain degree, maybe to this high right here. All right, now we are looking at the VIX volatility or fear index. There are three levels. Above this green line is the upper range, and it is bearish, and that's why it's in red. Now, the VIX is going to be the candlestick chart. This dark blue line here, as represented here, it shows you it's the S&P 500. When the VIX spikes up, the S&P 500 sinks down and goes south. So it's an inverse relationship. As VIX goes up, S&P 500 goes down. Well, what's happening? Right now, you can see that we are dropping down. When you're between this green line and this green line, you're in a low range because you're below 20 and you're above 16-ish. And below this green line, you are in the ultra low range, which is bullish. Look at all the time we have spent in the ultra low range. What happened during that? Most of that time, the S&P 500 advanced. The S&P 500 advanced, except for this turbulent time here in which it cratered down. Right? What's happening now? We are coming up in the VIX, and that is taking down the S&P 500 with it. But look what's happening. You are coming down into the low range. MACD reached a peak and it is clearly topped, coming down, getting ready to get below its signal line. Slow stochastics has softened dramatically because you've had some days of softening, and it is getting down to a level of 20. So if it begins to bounce and come back up, then, and the MACD is coming down, you'll be kind of like in this twilight zone area where this VIX is basically going to drift sideways, and you'll get some sideways action probably on the S&P 500. All right, now what we're doing is we're looking at a seasonality graph. What's happening? We're currently in the month of August. Where are we at? The S&P 500 is down 3.24% for the month of August. Now, going back for the last 5 years in the month of August, you have a 40% probability that you're going to close higher than when you open. Well, that's a very bad probability. Guess what? You've already accomplished that. You're already negative and upside down 3.24%. And there are 3 full weeks left to go in the month of August, giving plenty of time for this to come up even maybe even go slightly positive, and then come back down and still close the month negative and still meet this 40% probability. Take that as you will. Next month, you can see we fall off of a cliff in September. Very high expectations that we need to be bearish in the month of September. All right, now we are looking at a 3-year weekly chart for the S&P 500 on the Thinkorswim platform. And let me get this and just try to bring that down so we can see this a little bit better. And it's a little confusing. I've got 2 graphs in here that are overlaid, and because of that, it's a little difficult to read. So let me remove one of the graphs temporarily for now. We're going to remove that Fibonacci retracement there, so you just have this one fib retracement here. Now, this one fib retracement that I have here is taking us from this low to this high right here. And then we're measuring how far the drop came. This drop came and jagged the 78.6 Fibonacci from this low to that high. Well, that is fairly bearish because you came down so low. As an example, from here to this high to this one here, if we were to do a fib on that, actually we'll do it right now. Let's just activate this drawing. We'll just move this from that high, and we'll just grab this low to represent this low right here. And then when you look at that fib on how much this corrected down, well, it corrected down not even 38.2% before it found support and continued on. You can see the strength that we had right there. But now that strength is waning because we came down and tagged the 78.6 on this advancement, telling you that we're starting to lose energy in this market. So we want to activate this drawing, and we're going to change our perspective, and we're going to take the high and we're going to take the low right there. And now we want to see how far this advancement goes. And if you look at that, let me just bring this down so you can see that real nice. I've got highlighted in the red target zone here, anywhere between the 38.2. Let me just activate that so you can, let me just bring that out like this so you can see the numbers just a little bit easier. Okay. Now, 38.2% is the bottom of my target zone, and 78.6 is the top of my target zone. So there's my target zone. We're already into the target zone based off of this low from this high. So somewhere in here is where I want to sell my long calls and then go more short this market, more bearish this market. But right now, because this is just 1 week's worth of action on this bar here, and we just found support, I think that we can go a little bit further to at least the 61.8 and possibly the 78.6. Now, if we go all the way up to the 100 and surpass that, that is going to start changing my tune from this being a bearish market to a bullish market. We need to see how this is going to play out. But judging by how much this advancement corrected down to a 78.6 tells me that we're starting to lose energy in this market. Let's change over and look at a 1-year daily. And let's change our brackets over here to 1-year daily. And let's just get that so you can see it nice. Okay, similar type of a setup. And I've got this, now you're looking at daily instead of weekly. And I've got it from the low here, from the high, capturing the low here. And also I've got the target zone highlighted from the 38.2 to the 78.6, highlighted in red right here. So everything's identified, and what we are just starting to break out above this resistance line here. Let's see if that continues, takes us more into this red area here. And if we come up to that 78.6 and we actually tag it, well, for sure, I'm going to exit my long calls and start taking on an in-the-money covered call, because we know for a fact, well, we feel very strongly that the month of September is going to be a completely negative month. So taking that into consideration, I would like to take on some more in the money covered calls. So as the market tanks and goes down, I'm going to be able to put that cash into my pocket. So, and then when it comes down, I'll be able to buy to close those in the money covered calls at a much lower price than what I sold them at. We're not there yet, but that's my game plan. All right, now here is a spreadsheet that I created to determine the health of the market. Now, one of the things we want to look at is last week's number compared to this week's number. So when it comes to various asset classes, equities, real estate, precious metals, bonds, emerging markets, world markets excluding the United States, you can see that across various asset classes, we are severely losing steam here. We have a yellow signal and we went from 56 to 46. So generally speaking, not good. But when it comes to the 11 sectors of the S&P 500, last week we were at 62. This week we are at 68, showing strength. There is some strength. And look at all the green on the screen. I put greens on here on anything that's a 5 or a 6. Anything that's 4 or less does not get a color. So the more green, the better. We have a green here. We have a lot of green on the screen here. So it's okay to be long right now, this market, from my data, from the data that I'm deriving. Now we're looking at the 10-year bond yields, and we're looking at a 1-year chart of the 10-year bond yields. That is the candlestick chart. I also have 20-year bonds, which are in the black line. That's symbol TLT is the ETF. And then, of course, in the dark blue is spiders, our SPY. So what's happening? Well, this line here, this green line, the market seemed to have some respect for that line. You can see how it bounced there, but now we've sliced through it, came down, and we are down here. What does the market think about the bond yields being down here at the 39.42 level? Well, generally speaking, when you're at the 39.42 level, the S&P 500 is going, which is in blue, is going to advance. So we're okay with this chart the way that it is, with the levels that we're at. The S&P 500 can live with this bond yield, and it will advance with this bond yield. All right, guys, that is going to come to the end of this video. I just gave you, this is just an intra-month. So what I do is on the intra-month videos, I try to make them short and sweet. At the end of each month, that's when you have the longer videos. I do full videos, more content and stuff like that. But on the just intra-month ones, I just try to keep it short and sweet. Now comes the critical thinking. What are you going to do with the information presented in this video? Well, as of 8/10/24, the market summation, according to me, Ken, your friendly host for Spy Trader Now, we saw a market bottom at 510 on SPY. We now hold our long positions, and we're going to measure the rebound and determine the market strength. I showed you on the Fibonacci's how we're going to measure that. I showed you that in the video. If we do hit the 78.6 fib, I will sell my longs, which I told you, and I'm going to sell 2 in the money covered calls and probably take on some puts going out with a 1-year duration. And I'll show you those trades when I make them. Those trades are not on right now. You can see I got 2 long calls. Now, and that's it. I hope you got some valuable information out of this video. If you have not done so already, smash that like button down, subscribe to my channel, and ring that bell. I thank you and wish you good trading.